Well, congratulations, Mr. Gurnani, to you as well as your team. It's an excellent set of numbers by Tech Mahindra. What has really led to an EBIT margin expansion coming in at an 8-quarter high at slightly over at nearly around 15.9% and a beat in terms of the revenue growth as well as profitability.
So again, thank you, Poonam, and I do want to say we are happy, and I want to thank also my team because considering that this was a quarter where we were in the thick of the pandemic, I think the teams have rallied together very well. 1.31 billion of revenue, 15.9% of EBIT margin, 455 million net new deals, and 226 million of free cash flow. If I analyze the segmentation of this, comms, which you know is accounts for almost 40+% of Tech Mahindra revenue, grew 4.4% quarter on quarter. Enterprise has grown, and overall, I can only say in constant currency, it has been a great quarter. And the best part of this recovery is that Europe has led the recovery. Europe has now grown 8.5% quarter on quarter, and ROW has grown 4.6%. Americas have grown only 0.1%, but I think it is more cyclical than to see anything else in the trend. America's deal flow, deal pipeline continues to be very strong. In terms of the EBIT margin improvement, yes, there has been a concerted effort, but I would like Manoj Bhatt, if it's okay with you, to come in.
Thank you, CP. Thank you.
Right. Okay. I'll quickly ask another question to Mr. Bhatt. Mr. Bhatt, how are you really seeing the margin performance here? While Mr. Gurnani was alluding to the fact that it's a cyclical kind of a recovery when the Europe has done better and we are seeing good deal momentum, my question to you would be primarily in terms of margins. What really has led to such a huge margin expansion to 15.9%? And more importantly, I do recall that in the last quarter, you had mentioned that there would be salary hikes from 2021 onwards. So hence, in light of that, would Tech Mahindra be in fact able to sustain such high EBIT margins?
So I think, Poonam, if you look at margins, 2 or 3 things we have spoken about in the past, and you should look at it as a structured program on margins. So one is we said that work from anywhere, which means that you necessarily don't have to be in on-site locations to deliver outcomes for a customer. That's the program we ran. So if we look at the number of people who have moved over into locations like India, delivering the same outcome, that's increased through the quarter. The second is, of course, from an overall efficiency perspective, I think we have seen an increase in that, which is led by 2, 3 things. One is our automation platform. I think that's now driving a lot of gains. And when we are looking at delivery excellence using our new age delivery tool, so which talks about, really how do you manage complex outcomes in a work from home or work from anywhere environment. And those have led to significant gains. The second thing which has happened is, as revenue growth has come back, there's significant operating leverage in our business because the costs have not risen at the same level. So I think that's where you're seeing the margin improvement come through. About half of the margin improvement has come from some of those measures around automation, around offshoring, and so on and so forth. The other half has come from operating leverage. Now, as we look forward, I think we do agree that some of the costs around salary hikes and actually will go up over a period of time. But if I look at some of our current quarter where we can go further in terms of margins, I think things around this whole integration of our portfolio to drive more synergy. which is a lot. We have a lot of companies globally which have started to come together in the last 2 or 3 quarters. I think that's going to play a big role. I think as we look at it, the other thing to look at is we really are still, it's a continuous journey around some of these measures. So I think we should be able to absorb some of it in terms of as we go forward. So my sense is we should look at, and we've said this before, our goal was to see at least a 15% EBIT margin in F22 uh,
Okay.
going forward. And that's what we are trying to work towards.
Right. Mr. Gurnani, speaking about the deal momentum there, while the deal momentum has been fairly steady at over $400 million, um, my question is two-part. A, in which verticals, in which geographies have you seen the deal momentum coming through? And more importantly, why is it that we are seeing the deal momentum slightly lagging the peers?
Uh, Poonam, I think we're doing very well. And as I said, uh, my deal pipelines are all-time high. And I do expect the trajectory to become even sharper when it comes to the deal wins over the next few quarters. And number two, I think this one is, a fairly balanced growth that we have seen when it comes to deal wins. We had a 5G, a big deal one, and these are all net new. We don't take into account any renewals. So we have chosen, we're doing the 5G transport network for communication service provider in Europe. We are doing core infrastructure engineering for, again, a European engineering company, American healthcare company. We are doing a digital transformation, and we are also looking at ERP transformation for an aerospace company. So I think when I look at ROW and Europe have led, even the deals, and frankly, US will do well, and we will have to just wait for the next quarter.
Okay. My next question to you, to either of you, how large is the entire 5G opportunity for Tech Mahindra? And more importantly, when would we really see the revenues flowing in on account of the 5G investments that you have made?
I think, Poonam, we have already started seeing the revenues come in. Uh, we have divided the 5G market into three. The three segments are, number one, enabling and 5G ecosystem.
Right.
So the devices that you see today, all the 5G devices that are available in the market are now 5G enabled. Mobile devices, healthcare equipment. And this enabling means we work with the ecosystem to make sure that those devices are 5G enabled. The second segment for us is 5G in enterprise. So many of our customers, because they are, on Industry 4.0, or they are looking at a much better control over their communication infrastructure, they are spending money on rollout of 5G. The third is we serve a segment in 5G for carriers, which is really the software-defined networks. So I think the work has started on all three, and obviously the revenues we don't go around announcing because they're all OEM relationship on the ecosystem enablement. That revenue has already started coming in. Enterprise revenue, we have had few. Network side, I think on the software-defined network, both are running a little slow. The slow is either the governments haven't given the contracts or released the spectrum for 5G, or since the capital intensive upgrade of the networks, the telcos are also taking their time.
Okay. Um, Again, my question to you would be now more slightly futuristic. How do you see the overall, what would be the overall outlook in terms of revenue growth going ahead into the next year? Which sectors or which verticals do you see leading the growth? Because if I'm looking at some of the sectors during this quarter, technology and BFSI segment has slightly underperformed, and America, as you said, did mention, has slightly underperformed on account of cyclical trends. But more importantly, looking into the next year, where do you see the growth coming from, and how strong do you see the overall deal momentum as well?
So again, Poonam, if you look at the way we work, we have never ever projected or given any forecasts. What I can only tell you is that internally there are four offices which are working together on cultural, people, business, and process transformation.
Mhm.
And these four vectors have clearly showed that the growth will come in from practically all the sectors. And we hope to maintain the growth momentum. Europe has shown a very smart and a great quarter, but I don't think Americas will ever lag behind. ROW is always been strong for us. So I can only say is that uh, we do hope to have a much more balanced growth. And my Americas do about 50% of my business, and clearly, when they grow, the rest of the company will automatically grow.
Okay. Mr. Bhatt, my question to you is, what is the kind of increments or promotions that have been planned in 2021? And also, second part would be, how do you see Biden presidency, in fact, now, how favorable will that be for the entire IT industry as well as for Tech Mahindra?
So let me pick the second one first. I think in terms of whatever policies and outlook which has been given by the Biden presidency, I think clearly what we see is the era of certain laws around some of the immigration related matters and certain practices. I think that will definitely be a huge positive for IT industries. The second is, I think, from a overall perspective of uh, potentially a larger stimulus is what is being talked about, and then that is always good in terms of making the economy stronger, and then allowing our clients to invest more into IT. I think with this, I do feel that some of these will put in place a new baseline, I think, in terms of what we have seen, what are we going to see versus what we have seen in the last 4 years of the previous presidency. So to me, it's a out and out positive view at this point in terms of the outlook for us as an industry in terms of the changes happening. I think on salary hikes, we have said in the past that it will be staggered over the course of the year. In fact, in terms of the quantum, etc., I think we will pick up the market benchmarks and then do that accordingly. To me, the way to think of it is we will spread it over a matter of 2 to 3 quarters, maybe even 4 quarters, depending on how what we decide. But what we want to do is take cognizance of all the effort which has been put in by all our employees during these trying times, and try to adjust for that in the coming year.
All right. Okay. That was my last question, Mr. Bhatt. Thank you so much for speaking to ET Now, and thank you so much, Mr. Gurnani, for this interview. Wish you and your team all the best.
Thank you, Poonam. Thank you so much.
Thank you.